Hello and welcome to the weekly market commentary. I'm your host Alex Chalekian of Lake Avenue Financial. Let's review the markets from last week. We had the U.S. markets increase. We saw the S&P 500 up 1.62%, the Dow was up 0.96%, and the Nasdaq was up 2.67%. A decline in trading revenues led Morgan Stanley's fourth quarter earnings from continuing operations of 40 cents per share, which missed the Zacks consensus estimate of 47 cents. Wall Street didn't seem too impressed by the results. IBM reported fourth quarter earnings of $5.81 per share that beat consensus estimates. However, earnings declined 5.7% from the year-ago quarter figure of $6.16. Q4 revenues of $24.1 billion not only missed estimates of $24.7 billion, but also declined 11.9% year over year. Global services revenues declined 7.8%. Global technology services revenues declined 7.6%. Global business services revenues declined 8.4%. And lastly, the systems and technology revenues were down 39%. Now, on the other hand, IBM's cloud revenues soared 75% year over year. IBM's big data business, analytics, cloud computing, mobile, and social businesses are positives for Big Blue, but they continue to struggle in transforming their business from primarily a hardware company to a software and services model. We also had some major economic reports from last week. Housing starts was at 1.09 million, existing home sales of 5.04 million, initial jobless claims of 307,000. Now we take this number with a grain of salt because it seems like the powers that be are just making them up as we go along. Now let's take a look at the week ahead. This week we have the durable goods orders, new home sales, pending home sales, consumer sentiment, and the big one is the FOMC announcement on Wednesday. Now the Federal Open Market Committee will update us on the state of the economy and its expectations for monetary policy. This will let us know if they will raise interest rates. Now, we don't expect them to raise rates till later on in the year. We are deep in earnings season, and there are a lot of companies that will be reporting this week. But these are the ones that we will be following more closely. We have Microsoft, Texas Instruments, Apple, Caterpillar, Corning, Pfizer, Procter & Gamble, AT&T, Yahoo, Boeing, Facebook, Qualcomm, Amazon, Alibaba, Ford Motor, Google, Visa, Viacom, MasterCard, Chevron, and ConocoPhillips. Now I'm curious to see how these two companies report given the low price of oil. In a widely anticipated move, the European Central Bank announced it would direct national central banks to purchase 60 billion euros in sovereign assets each month. Now the plan limits purchases to investment-grade assets, but including in those debts of countries under EU and IMF structured bailout programs, such as Greece. Beginning in March, the program is targeted to run through September 2016, bringing the balance sheet to approximately $3.3 trillion. Now, though the ECB was careful to give itself flexibility on an end date dependent upon inflation, the move will likely hold government debt yields near their current historic lows and maintain lower rates in the foreseeable future. Despite this move, the scope of the ECB action pales in comparison to Japan's aggressive easing. The moves have pushed each country's currency to new lows, which could boost exports in the coming months. In both cases, easing could push market interest toward risk assets, and we recommend investors to look for opportunities in assets with negative correlation to government debt yields. Thank you for watching our video. We'd love to hear your comments. To watch some of our other videos and read our blog posts, please visit our website, lakeavfinancial.com. There you'll be able to subscribe to our weekly newsletter. You can also find us on Twitter, LinkedIn, and Facebook. And remember, here at Lake Avenue Financial, we manage your wealth with your goals in mind. Thank you.